Hello, Mark Lloyd, leader on home loans. Today we'll discuss why you should refinance out of an FHA into a conventional loan. The low credit and down payment requirements reduce the barrier to enter for home loans. But there comes a time when refinancing out of an FHA loan is a good idea. Here are the reasons why you should refinance your mortgage from an FHA loan to a conventional loan. A conventional refinance allows homeowners to 1. Remove mortgage insurance, 2. Lower PMI payments, 3. Refinance their primary or secondary residence, 4. Get a lower interest rate, 5. Get cash back using their home's equity, 6. Lower monthly payments, 7. Refinance from an adjustable rate to a fixed rate, 8. Shorten the loan term. FHA versus conventional loans. FHA and conventional loans are the top two types of mortgage loans used in America today. There are several key differences when comparing FHA versus conventional mortgages. FHA loans are easier to qualify because they require just a 580 credit score and a 3.5% down payment, much lower than conventional loans, which typically require a 640 credit score and 10 to 20% down. While FHA loans are easier and cheaper to qualify than conventional loans have lower mortgage insurance and allow a borrower to drop their PMI payment once the loan-to-value ratio reaches 78%. FHA requires MIP, which is the mortgage insurance premium, for the life of the loan if you put down less than 10%. Even if you put down 10%, you will have to pay MIP for 11 years. PMI is describing mortgage insurance. MIP stands for mortgage insurance premium on FHA. PMI stands for private mortgage insurance on conventional loans, essentially the same thing. Refinance out of FHA loans to remove PMI. You cannot simply get rid of mortgage insurance on an FHA mortgage. To stop paying PMI on an FHA loan, you will need to refinance into a conventional mortgage. If you have paid down the loan to 70% of the value of the home, you can refinance a conventional mortgage without having to pay PMI. Conventional PMI rates are lower than FHA. The mortgage insurance fee on a conventional loan is lower than it is for FHA. FHA MIP rates are 0.8 to 1%. Many conventional mortgages have annual PMI fee as 0.5. On a $200,000 home, and savings almost $80 per month. While it's not a huge saving, the PMI will drop off once LTV reaches 78%. After the PMI is dropped, saving almost $2,000 per year. You can generally refinance an FHA into a conventional mortgage after 6 months. Refinancing out of FHA loan, pros and cons. Pros, lower PMI payments, remove PMI if the loan to value is under 70%. Cons, requiring paying closing costs 1 to 5% of the loan amount, more stringent credit and income qualifications, closing costs. One of the disadvantages of refinancing out of FHA on a conventional loan are the closing costs. Closing costs are fees charged by lenders for originating the loan. The average closing costs are between 1.5 to 3% of the loan amount. On a $200,000 mortgage, the closing costs can be as high as $6,000. In order for the refi to make sense, you should set to save more than $6,000 on your new mortgage. FHA Streamline Refinance. Refinancing out of an FHA loan doesn't always make the most sense for some people. If your loan to value is still pretty high and you will not be in a position to cancel PMI anytime soon, you can lower your interest rate and monthly payments with an FHA Streamline Refinance. Streamline refinancings require less paperwork and are much easier than traditional refinancing. Another advantage of Streamline Refinance is that there are no credit check or income verification. If you are struggling with bad credit, you may still qualify for an FHA Streamline Refinance. And then again, this has been Mark Lloyd, leader on home loans. You can reach out to me at www.talkwithmarklloyd.com, 207-478-2065, and you can apply directly on my website at www.markalloyd.com. Thank you.